Hey everybody, it's Joe with Joe Knows Cryptos, and today's video is going to be on the types of trading styles that people seem to use in cryptocurrencies and the trading style that I use in cryptocurrencies. So, let me get into the first one, which many of you have heard of the word HODL, HODL. It's holding or hold on for dear life. Hodling is a strategy where you research some cryptos, get some advice on cryptos, and you find some that you really like, that you think have long-term potential, and you buy them and you accumulate those cryptos in anticipation that in the future they will be higher in value than where you purchase them. And not just a little bit, you're hoping that they will be substantially higher than where you purchase them at currently in the market. So let's see, there are pluses and minuses of hodling. So the pluses are that supposedly you're not too concerned with fluctuations in the market because it could be up today, down tomorrow, down next year, and up for the next year. The crypto market fluctuates in large swings in one direction or the other, as we've seen over the last year especially. In cryptocurrencies, each individual currency seems to be affected by the general overall market, some maybe not quite as much, but the idea of hodling is that you don't stress over these large fluctuations, because even though it's down this year or this week or this month, you have no intention of selling it for maybe another 2, 3 or longer years out. So if it's down today, you're not worried about it. You're just holding on, accumulating and adding to your positions. So when the market does reverse and does go up and the crypto that you're looking at is worth a lot more, then you'll sell or use it as currency, just depending on the times. And you're happy with that, you're satisfied with that. So that's the pluses. It's less stressful as far as following market conditions and news and all of that type of stuff. However, I know that everyone who's involved in cryptocurrencies is always checking their portfolios, probably at the least weekly, but probably daily. Let's be honest. All right, so the negative sides of hodling are, it seems like when people hodl, they only choose a few coins, and that their variety and they don't spread out into enough of different opportunities in cryptocurrencies. Can't even say the word today. So problem with that is if you only hold a few cryptocurrencies, it's almost like putting all your eggs in like one basket type of deal, and you're throwing your whatever it is, $100 a month or $200 a month or $500 a month, whatever you can afford, into these cryptocurrencies in the anticipation of the rise in value. Well, what happens if that cryptocurrency, since you're hodling, maybe you're not following the news in the market quite as closely as you should? Maybe you're missing news about the cryptocurrency that you are hodling. Maybe you're missing news on competitive cryptocurrencies that are competing against yours, that are maybe advancing faster than yours. And maybe the one that you're hodling may not be the best one to actually be in. As time goes by, things change and technology changes, demand changes. What's in need today may not be in need tomorrow, and what's not in need today may be in need tomorrow. So the technology in cryptocurrency, with all these coins constantly upgrading and changing, and philosophies even changing, and their plans for the future changing, you may miss out on some very important things that may actually cause your coin to underperform, and all this money that you're putting in there and not really maybe paying that much attention to, you could actually end up hurting yourself. The other downside is if there are runs up and down in the market, you are missing out on the ups if you can sell and time it. Nobody can time it exactly right, every time or even most of the time. But if you can manage to make a few trades here and there, you're missing out on that money. And then, if it goes up a bit and you sell, and the market comes down, you can actually accumulate more of your favorite crypto, um, just using the market's money. So those would be the main disadvantages of hodling. Overall, hodling may not be a terrible strategy as far as making a lot of money, and whoever says they're not in cryptocurrencies to make money says they're not in it to make money is full of you know what. So we're all in it to make money. We're not all in cryptocurrencies just to you know throw our money around and say we're in cryptocurrencies. We all want to make money. Um, all right, so the next type of action in the cryptocurrency market is going to be your trading. People who trade actively. These are people who find a hot coin that's maybe going up and they jump in. It may be a lot of hype around a coin and they jump in, and then they try to sell out, and they usually have a percentage gain that they're looking to make off of each time they enter the market on a specific crypto. Maybe they want to make 10% or 20%, or maybe it's a dollar amount. Maybe they put a lot of 10,000 in, hoping just to make $150 and then sell out. Maybe they want to make 10% on that. But whatever their strategy is, or maybe they just like to feel it. Maybe they try to watch the charts and say, okay, it looks like it's going to start trending upward. Let me get in now, and then let me get out when I see it starting to slow down or the trend starting to reverse. The pluses with that are that it keeps you busy if you're really into action and watching markets and following the news closely and getting in on trends, and that's what you like to do. It excites you. It's more of a gamble type of a game. It's more like more risky because you're in and out. You may lose some, you may lose some. You're hoping to win more than you lose. Overall, it's much more stressful because you pretty much have to watch the cryptos that you're invested in very closely. You can put in stop orders and things like that as well. But most of the time, I find people that do these watch charts all day. They're on their Binance or whatever, watching the graphs, watching their lines, watching the trades up and down. And so first off, it is stressful because you're always worried about getting in, making the most that you can, or not losing too much. And things, are always swinging up and down. And like I've mentioned in other videos, the charts in cryptocurrency I don't have much faith in, not until they are consistently performing at a level with some sort of accuracy. Some people who follow charts will say that they are, but I'll be honest with you, cryptocurrencies swing every which way you can imagine. When you say it looks like it's ready to break out upward, it goes down, 15%. We say, oh, it looks like it could either break up or break down. It's going to go one way or the other. It stays the same for another, 2 months. My faith in charts in cryptocurrencies is very, very little. The negatives are that the more trades you make, the more money you're spending, because every time you make a trade, you are losing some money in commissions, whether you make money or lose money. So even if you break even on a trade, you're going to lose money because of the trading, the commissions. The other thing is, a lot of it depends on where Bitcoin is going. So if you make a trade and then you hop out of the market and Bitcoin goes down and then you jump back in, you could lose money just because in the interim your money is being held in Bitcoin. And if Bitcoin goes down, then you're losing money there. If Bitcoin goes up, then you're making money there. But it's a lot of uncertainty, and the markets can swing dramatically on news. And now they haven't been swinging as much lately, but anytime negative news would come out, the markets would get hit hard, 10-15% in a day or two. And now good news comes out and the markets don't really seem to be affected at all. So day trading can be very difficult. It's not for everybody. It's for people who like excitement, who think they have it figured out, and some people can do it with some amount of success, but it is risky and it is stressful. So that's my opinion on day trading. The type of trading that I like to do, I like to call trend trading. And trend trading is more of finding a crypto that I believe is going to be going up in the short term, that it's into a trendy subject at the moment. It's into something that's being talked about. It's something that is starting to be hyped but isn't fully hyped yet. So it has a lot of upward momentum and potential behind it when the news actually does come out on it. And this way you don't have to watch the coins quite as closely. Of course, you do have to watch and see if the news that you were hoping for does not come out, or reverses, or is canceled, or the government steps in and throws a wrench in the works. But other than that, you do have to watch it on a daily basis, but you don't have to watch it on a minute-to-minute basis like a day trader would. And so it's a lot less stressful that way. These are usually holds of anywhere from a month to multiple months. So it's not quite hodling where you hold on for years, and it's not like day trading where you can be trading the same coin 4 or 5 times in a day. It's more of I'm buying in at this level in the anticipation that in the near-term future I expect it to go up, and I have good reason to expect it to go up, and I don't mind holding it for a month or two. I don't have that little patience that I can't wait to get my return gains on it in that time frame. And I had mentioned, in the stock market, if you can get 10 to 15% in a year, you're thrilled. If you're a broker at a company and you're earning your clients 15 to 20% in there, you're getting a raise, you're getting the corner office with the window, with a view, you're getting high fives, people are saying hi to you when you walk down the hall, you're not saying hi to them. You're feeling good, you're walking tall, you're feeling proud. And cryptocurrencies, what I'm trying to do is make that amount every single month. And I should be doing backflips and high-fiving people, but it's a little bit lonely out here in the cryptocurrency world because I don't know a lot of people in my local area that have cryptocurrencies. It's still a very small market, which gives it a lot of potential for upward momentum when it does start to catch on. But right now, that is my trading strategy. The downsides of it let me give you the upsides are that you don't have to watch it quite as closely as a day trader, so it's a little bit less stressful. You don't have to look out for as many coins as a day trader. Day traders are constantly scanning coins and seeing if they're down, if they're going to go up. So you really only have to find a few that you really like per month and put your money in those, and then just kind of hold on. It's better than hodling in a way that you can maximize your gains. So when the coin does go up and hits your target goal, either money-wise or percentage-wise, you can sell and get out. And then hopefully when it comes back down, either get back into it or get into another one that you found that you like. So there is some research required, but not quite as much as a day trader. Now, as far as the downsides, I would say since you are trading, there is always risk that the ones that you go into will go down. And that's a risk, though, I think, with anything. That's the main reason that I prefer to do this type of momentum, type of trading, is because I don't have to watch it quite as closely as a day trader, but not as stressful as a day trader, but more profitable, in my opinion, than hodling. Okay, I'm running out of time. I'm only allowed to do 15-minute videos. Please like, subscribe, ring the bell so I can do longer videos with more information for you on cryptocurrencies. Love cryptos, love you guys. God bless. Good night.